This is taking so darn long. Hey, good morning, everybody. There we go. Good morning, everybody. Welcome to the Morning Volatility Report. This is Andrew Nazi, Chief Operating Officer of OptionPit.com, filling in for Mark Sebastian on this glorious April 20th. Long-term option trading. We do a class like this every Wednesday in Option Pit, but we're going to do a Saturday class on some of the techniques of trying to manage longer-term trades. Alrighty, so they'll be hedging, call selling, put buying, ratio put buying, using TLT, all kinds of stuff to give you a little bit more room. Again, as we're moving into low vol periods like now, right, the basic idea is you want to be able to ride the market up, and you also want to be able to make money or at least break even when the market's falling apart, giving yourself chances to buy more stuff. So that is what this is going to be about. Okay. Also, you check out our blog every day. Okay, we're going to look at IBM today as well. Maybe this could be what I would call like a CD trade where we continue to override in the money calls and see what it pays us. Okay, we'll see, right? How all this goes, right? Right now, though, the idea is that IBM, the vol is so cheap and everything looks so ugly. That there could be an opportunity here, but we'll see what the deal is. All right, but we'll see. All right, so we'll price that today in our chat room. So also, for anybody of you interested in our services, this is kind of what we do, right? Kind of a long. We have our day, our chat room's open, pit report. We do cover different stuff during the day, during the week, with our gold sessions. We're restarting our Platinum series tonight for spring, which is kind of more advanced education. And with that, let's go to the markets. All right. Oil, not doing too much. It's hanging here. Let me get go up. This is what I want. Okay. We've had a couple of ideas in here. Oh, here we go. The euro is finally starting to fall apart. Let's see. So a couple of things. One is, okay, we've got the euro. It's still hanging out. The market's not doing anything. We had a sub 13 settlement VIX today. I think we settled, the initial was 1281. Total annihilation for vol. Okay. We still have Draghi to speak on the euro and what they're going to do. Yep, tomorrow. So we'll look at, but I'll tell you what, there is some vol here. Let's say the April 22 cycle, right? 12 vol, May cycle, 8 vol. Lately, though, the euro has been doing nothing. So again, strangeness in currency land is all I'm going to say. The dollar continues, well, has been anyway, falling apart. And the euro has been gaining ascendance, and all of this is just strange considering the U.S. is the only one that's even considering raising interest rates. Okay. So strangeness is going on. So mostly what we're trying to do is we're trying to look for volatility in places where we think it's already fallen apart. The euro basically is, the vol's low, but it ain't doing much. And it seems really, honestly, to defy gravity. So again, it's been a crowded trade. Why it's not down at that level, I have no idea. But that's what we have. cheap vol, we looked at some maybe ratio time spreads in there. Looked okay, not great. But hard to believe that this currency is going to be able to hold up at the highs of the year for the rest of the year. Okay. Next thing we have the continued rally in gold. We had a couple ideas in here again, more time spread, ratio time spread that seemed to be doing pretty well. The whole idea of gold and the gold miners, I think even individual miners, to me, most of this volatility looks underpriced. The gold miners, all of it, whatever's going on with the commodities right now and silver, all the volatility to me is underpriced. When you look at a chart like this, you have 60-day volatility in the 50s, and they've got the implied so low. It's hard to lose money owning premium in these things. That's positions we have in our strategy letter. They're doing okay, and I don't see any reason to change that. So the one thing we have now is we have a market not going anywhere. We have implied volatilities very low, but we actually have, again, more solid potential movement in a lot of these names. Banks still are looking good. Gold, miners still looking good. Technology seems to be kind of falling apart until we start getting some of the marquee earnings out, and we'll see what happens on that. And we'll see just last thing. Netflix is recovering a little bit. Okay. And with that, that's the vol report. I don't expect VIX to do very much. When we look at it, we are in what I would just say just mass contango. We've got 63-cent markdown in VIX cash, and the May future now moves to the front. It's trading 1607. That's $3.50 over parity at this point. Just mass decay in all these products, even products like ZIV. They're going to trade heavy. So until the market does something really bad, all these vol products are going to fight gravity, and I would not touch them on the long side with a 10-foot pole. Even though VIX is very low, it's going to take a huge move to make it happen. All right? And with that, again, stick with where the strength is. It keeps 2 steps forward, 1 step back in gold. The euro could make an interesting play. We'll cover that in our chat today. And other than that, we have our May 7th class, and Mark will be doing a special webinar on the 22nd. All right, everybody, you have a good day, and I will talk to you all later.